Welcome to the ProfitMaxx software tutorials. This tutorial series will help you better understand the setup of your ProfitMaxx software and let your service department realize the benefits of proper technician management much quicker. Let's get started. Welcome to the tutorial for the Managed Maintenance Customer Growth Report. The Managed Maintenance Customer Growth Report deals with capturing new ongoing business for your company by selling maintenance agreements. It may seem odd to you that we're talking about gaining new ongoing business by selling maintenance agreements, but having a good, solid, well-thought-out maintenance agreement program is essential to the profitability of your service department and the growth and future of your company. This tutorial will take a look at just how much revenue a properly managed maintenance agreement program means to your company. A good, solid maintenance agreement program is literally the foundation stone for growth in the years to come. Profitably priced maintenance agreements do far more than get another service call to go out on. It guarantees income for your company for years to come. Your customers want maintenance agreements, and offering them will tie your customer to you. There is the revenue that you will realize each year from renewals, service calls and parts revenue that'll come should there be a failure. Add-on sales because you've trained your technicians to look for these opportunities. And when it comes time to replace the system, you will have established the trust relationship with the customer and have first look. For this tutorial, we'll be using the Managed Maintenance Customer Growth Analysis Report. When you run this report, ProfitMaxx will show you the performance for each technician on your team as well as a summary for the team as a whole. We'll go through each of the values shown on this report so you understand exactly what it's telling you. Each technician is identified in the upper left-hand corner of the page. In this particular case, we're looking at Bruce Dern's performance numbers. This analysis report pulls information from several other reports within ProfitMaxx. Source reports are always identified at the bottom of the analysis reports. For this particular analysis report, information is being pulled from the Maintenance Agreement Sold Evaluation Report and from the SPIF Earned Report. The Maintenance Agreement Sold Evaluation Report can be found by clicking on the Forms and Reports icon on the toolbar within ProfitMaxx, then Service on Track, then On Track Overview, then Profit Smart Activities, and finally on the Maintenance Agreement Sold Evaluation Report. The SPIF Earned Report can be found by clicking on the Forms and Reports icon on the toolbar within ProfitMaxx, then Bonuses and Incentives, and finally on the SPIF Earned Report. Let's take a look at our technician's performance. We'll start out by looking at Bruce Dern's performance. As I mentioned earlier, I'll go through each of the values on this report so you can understand exactly what they are telling you. This report is broken into three sections. The first section shows the technician's actual performance by equipment age, old, medium, and new. The second section shows the technician's actual performance measured against the expectation as you defined in setup and shows the potential lost revenue to the company had the tech performed up to your expectations as we defined in setup. The third section addresses the potential future lost revenue based on capturing a customer for life by maintenance agreement sales. Let's start in the actual performance section. First is the service calls with a maintenance agreement sale. This is all service calls where the technician sold a maintenance agreement by equipment age. On old equipment, Bruce sold 4 maintenance agreements. Next is the opportunities. This is the total number of service calls in that particular age group where an opportunity to sell a maintenance agreement existed. ProfitMaxx looks at all residential calls where the tech did not circle MC, which stands for Maintenance Customer, on their timesheet. These are opportunities that the tech had to sell a maintenance agreement. Service calls to existing maintenance customers, those which the tech did circle MC, obviously don't count against the technician. Neither do transfer calls or commercial calls, as most companies tend to rely on their sales force to sell maintenance agreements to commercial customers. Bruce only had 3 opportunities on old equipment. Percent of sales calls with a lead. This shows what percentage of service calls that qualify as an opportunity, where the technician sold a maintenance agreement. In Bruce's case, he was at 133% for old equipment. This tells me that he had one call where the customer was not a maintenance agreement customer, but he circled MC in error and sold a maintenance contract anyway. Or the second option is that this was a maintenance customer who had at least one piece of equipment that was not covered by the contract, and he was able to sell an agreement to cover that piece of equipment as well. For medium-aged equipment, Bruce sold one maintenance agreement. He had two opportunities, resulting in a percentage of 50%. On new equipment, Bruce didn't sell any agreements. He went out on one service call on new equipment that didn't already have a maintenance agreement. This puts his percentage, obviously, at 0%. The Managed ProfitSmart Performance section of this report shows you the impact of managing the ProfitSmart performance of your technician when it comes to maintenance agreements, and just what the impact of doing so could have on your company. First, the maintenance agreement sold goal is the percentage of service calls that the technician should, on average, sell a maintenance agreement. For old equipment, they should be selling maintenance agreements on 12% of the time. Next, the opportunities is the same as the section above. This is the total number of service calls again in the equipment age group where the tech had an opportunity to sell a maintenance agreement, excluding service calls to existing maintenance customers, transfer calls, or commercial calls. And again, Bruce had 3 opportunities to sell a maintenance agreement. The expected sales is the number of service calls that the technician would have sold a maintenance agreement on had they performed up to your expectations. If Bruce had sold a maintenance agreement on 12% of his opportunities, he would have sold an average of 0.36 maintenance agreements. Service calls with a maintenance agreement sale is the actual number of maintenance agreements that Bruce sold. He actually sold 4. The difference is arrived at by subtracting the actual number of maintenance agreements sold from the number in the expected column. If the tech meets or exceeds our goal, this will show a 0. We're looking for areas of improvement. In Bruce's case, he exceeded our goal, and therefore we're showing a 0. Maintenance agreement price point is what you charge for maintenance agreements per unit service per year. You enter this during setup. In our case, we sell maintenance agreements for $99 per single unit. The lost revenue is the number from the difference column times the maintenance agreement price point. This is the amount of revenue your company should have seen had your techs performed up to your expectations. In Bruce's case, there was no loss. On medium-aged equipment, our goal is 42%. In other words, he should be able to sell a maintenance agreement on 42% of all service calls that he goes on that do not currently have a maintenance agreement. Bruce had 2 opportunities on medium-aged equipment, so our expected maintenance agreement sales was 0.84 for this time period. The number of service calls with a maintenance agreement sale, well, Bruce had 1. He's exceeded our goal. Our goal, again, remember what we expected was 0.84. So he exceeded that. Maintenance agreement price point is 0, but again, since he exceeded our goal, there's no lost revenue. The new equipment, again, our goal is 42%. Bruce went out on 1 service call on new equipment, and therefore our expected sales would be 0.42 sales. He didn't sell any, so that means he fell short of our goal by 0.42 maintenance agreement sales. When you multiply that times our price point of $99, we had lost revenue for Bruce on new equipment of $41.58. That puts our managed maintenance agreement revenue lost at $41.58 for Bruce Dern. Now let's look at the future maintenance section. The future maintenance section of this report takes a look at the total lifetime value of sales and revenue that your company could have realized by selling maintenance agreements to customers at the level that you expected. Every maintenance agreement sale creates another potential customer for life. Over the life of that customer, there will be significant revenue from annual maintenance contract renewals, equipment add-ons, system replacements, and more. It is absolutely imperative that you secure these customers when your techs come across them. First, the maintenance customers lost is the total maintenance customers lost from the difference column in the Managed ProfitSmart Performance section on this report. Bruce had 0.42 total. Next, The allocated hours per maintenance call is the amount of time that you allotted in setup for a maintenance agreement to be performed. We had allotted 0.75 hours or 45 minutes per call. The future maintenance hours lost is the number of maintenance customers lost multiplied by the allocated hours for performing a maintenance call. Bruce is at 0.32. The average repair revenue per hour is your average repair revenue per hour that you expect from your technicians when performing a maintenance call. This is the revenue you would receive from selling additional accessories and performing repairs discovered during the inspection and maintenance but were not covered by the maintenance agreement. We're looking for $40 per hour average. The future maintenance repair revenue lost is the potential revenue we missed from accessories sold and repairs performed while on a maintenance call because of these missed maintenance agreement sales. Bruce lost a total of $12.60. The value of a customer for life is the revenue that would come into your company throughout the lifetime of a customer. We set this value in setup. If you need a refresher or for more information on how this value is calculated, refer to the tutorial for software setup on the other tutorial CD provided with your ProfitMaxx. In our case, the value of a customer for life is $15,000. Now I should note that aside from the lifetime value of a customer, turning non-maintenance customers into maintenance customers is the best, most consistent way to build your service customer base, which happens to be the hardest part of your company to grow. Your service technicians should be adding approximately 3 new maintenance customers per week to your customer base. This totals 144 new maintenance customers per year per technician. The lifetime customer revenue lost is the maintenance customers lost column on the far left multiplied by the value of a customer for life. The future maintenance repair revenue lost column is not added into this number because it's already accounted for in the value of a customer for life figure, and counting it twice would really not be fair. Bruce had a lifetime customer revenue lost of $6,300. So had he sold maintenance agreements at the level that we'd expected to see, our company would recognize another $6,300 in revenue based on his performance this month alone. In addition to that, a couple of other notes to make here. First off, remember that our goal for maintenance agreement sales on old equipment is 12%. Bruce was at 133%. For this, I'm going to have to give him a thumbs down, and here's the reason why. Yeah, he dramatically outperformed our expectations, but on old equipment, we really don't want to sell a lot of maintenance agreements. For old equipment, that's an area that they should be actually turning those into good qualified sales leads, not selling maintenance agreements on them. Next, on the medium-aged equipment, our goal was 42%. Bruce was at 50%. So in that case, we'll give him a thumbs up. He's right at or just above our expectations here. On new equipment, our expectation is 42%. He was at 0%. So on that one, we'll have to give him a thumbs down. So that's Bruce's performance. Let's go ahead now and take a look at our next technician's performance. That technician is going to be Bryant Bryant. We'll start out in the actual performance section of this report. First, on old equipment, the service calls with maintenance agreement sales, Bryant had 0. He went out on 4 calls with an opportunity. That puts his overall percentage at 0%. On medium-aged equipment, he had total service calls with an agreement sale of 3. He had 4 total opportunities, and that puts his percentage at 75%. On new equipment, Bryant didn't have any sales of maintenance agreements, but if you look, he didn't go out on any service calls either. So again, his percentage is 0. That section of the report really doesn't apply to him because he didn't have any service calls. In the Managed ProfitSmart Performance section of this report, we first start out again with the maintenance agreement sold goal. For old equipment, our goal is to sell a maintenance agreement on 12% of all equipment. We had 4 total opportunities here for Bryant, so we would have expected him to sell 0.48 total sales. Actual service calls with a maintenance agreement sale, 0. That means we have a difference of 0.48. He underperformed by 0.48 sales. Our maintenance agreement price point is $99, so that means we have lost revenue of $47.52. On medium-aged equipment, our goal is 42%. Bryant had a total of 4 opportunities, so our expected sales would have been 1.68 maintenance agreement sales. Bryant had 3. He exceeded our expectation. So again, we'll list the difference here as 0. And again, when we multiply that times our price point, we still have a lost revenue of 0. On new equipment, our goal is also 42%. He didn't have any opportunities, so we're going to have zeros all the way across the line on this particular report for Bryant. So that puts our managed maintenance agreement revenue lost at $47.52. Now let's take a look at the future maintenance. What did we lose as a result of him not performing up to our expectations? Again, from the previous section, the maintenance customers lost was 0.48. The allocated hours per maintenance call is 45 minutes or 0.75 hours. Future maintenance hours lost, 0.36. Our average repair revenue per hour is $40 per hour. That's what we're looking for to get extra parts and pieces and add-on sales. So that puts our future maintenance repair revenue lost at $14.40. Remember, the value of a customer for life as we defined it was $15,000. So when we multiply that times the maintenance customers lost, the lifetime customer revenue lost for Bryant was $7,200. Now, again, looking at how he did above, our goal on old equipment was 12%. He was at 0. He didn't sell any, so we've got to give him a thumbs down. He should have at least gotten 1. On medium-aged equipment, again, our goal is 42%. He's at 75%. So again, he exceeded our goal in this section. We'd have to give him a thumbs up. Good job there. On new equipment, goal is 42%. He didn't sell any, but again, remember, he had no opportunities, so it's kind of a non-issue for Bryant. So that's the way he shook out. Let's now take a look at Rob Roy. His name can be found in the upper left-hand corner of this report, and since we've gone through it twice already, we can go through it just a little bit quicker. I'll just hit some of the totals columns. First off, in the actual performance section, the percent of service calls with maintenance agreement sales, on old equipment, Rob was at 75%. On medium-aged equipment, he was at 100%, and on new equipment also at 100%. In other words, he sold maintenance agreements on. He had 1 opportunity. He sold a maintenance agreement on that opportunity. In the Managed Profit Smart Performance section, revenue lost, total of 0. Again, he exceeded our expectation in every category. That being the case, since he exceeded the expectation all the way through, we have lifetime customer revenue lost of 0. Now, again, in this particular case, I would look at the 75% performance on old equipment and question that a little bit. Again, why isn't he turning those calls into qualified sales leads as opposed to selling maintenance agreement? Is it because it's easier? Or is he not thinking in those terms? Again, there's a lot of value to creating that qualified sales lead. On medium-aged equipment, our goal is 42%. He's at 100%. He did a great job. And on new equipment, again, 100%. We'd have to give him 2 thumbs up there for that one. Next, Sean Kemp. Again, we'll just go through the totals column on this particular report. You can find Sean's name in the upper left-hand corner of the report. In the actual performance section, on old-aged equipment, Sean had 2 opportunities. He didn't sell any, so his percentage is 0. On medium-aged equipment, he sold agreements on 75% of his opportunities, and on new equipment, he didn't sell any of the opportunities. In the Managed Profit Smart Performance section, we had total losses, managed maintenance agreement revenue loss of $106.92. In the future maintenance section, we wound up with lost revenue here, lifetime customer revenue lost of $16,200. Now in Sean's case, again, 12% is our goal for agreements. He was at 0. We have to give him a thumbs down on old equipment. On medium-aged equipment, our goal is 42%. He was at 75% there, so that's going to be a thumbs up. And in the last section on new equipment, again, our goal was 42%. He was at 0, didn't sell any, so that one's going to be a thumbs down for Sean. The next page on the report, last page, on all of the analysis reports will always be a team summary. In this particular case, if you remember, Bruce Dern had total performance revenue lost of $6,300. Bryant had total lost revenue, performance revenue lost of $7,200. Rob didn't have any. And Sean had $16,200. That puts our team total performance revenue lost over the lifetime of our customers based on performance for this month alone at $29,700. Again, remember that's just this 1 month. Over the course of a year, this pace would total $356,400. That's a lot of revenue lost from 1 year's performance. So what did we learn? Again, remember that a properly managed maintenance agreement program can have huge impacts on your company for years and years to come, over the lifetime of that customer. Remember that maintenance agreement performance, good maintenance agreement performance equals profitability. There's guaranteed reoccurring revenue from renewals every year. You'll be the first one to be called should there be a problem and the service be needed. There will be add-on sales that you can take advantage of, and you'll have created that trusted relationship, and you'll get the replacement business when it comes time for that replacement to take place. Be watching your guys. Spend some time train them. Make sure they understand the importance of two things. Number one, that they need to be looking for maintenance agreements, that they know what your expectations are in terms of what they should be selling for maintenance agreements on new, medium, and old age equipment, and also that on old aged equipment, not to be selling maintenance agreements all the time. Old age equipment are, that gives them the opportunity to be looking and turning that into a good, solid, qualified sales lead where you can get the equipment replacement and benefit the rest of your company. Make sure the guys understand this on every single call. Hopefully, now you have a better understanding of the Managed Maintenance Customer Growth Report. Keep in mind that you can replay this tutorial at any time that you need to remind yourself of what this report is telling you, as well as using your F1 key to get detailed information while looking at this report in ProfitMaxx. Your F1 key is context-sensitive help. Any place in ProfitMaxx that you're looking at, you can press the F1 key and get detailed information about the particular page that you're currently looking at. This will end this tutorial. Select the next tutorial you wish to view. Thank you.